ladies and gentlemen. Welcome to another episode of Motivation in Action. I'm your host, Javier Romero, and today we're diving deep into the world of financial empowerment. Buckle up because we're about to turn knowledge into action. Our topic today is a game changer: budgeting and protecting with financial intelligence. Whether you're a seasoned investor or just starting your financial journey, this episode is packed with practical insights. Our guest experts for today are Mr. Christopher McGann. Mr. McGann is the founder and managing director of PPF Financial Services Limited. PPF Financial is a licensed securities firm that facilitates trading of shares, bonds, and other securities and arranges securities transactions. Prior to joining PPF, Mr. McGann worked in financial regulation, private banking, and energy. His areas of expertise include financial and economic analysis, green finance, and risk management. Mr. McGann holds a Master of Science in Banking and Finance from the University of Reading in the United Kingdom and a Bachelor's in Financial Markets from Anglia Ruskin University. Also joining us is Ms. Shawn Smith. Ms. Shawn Smith is a proud graduate of the class of 1999 from Independence High School, earning her diploma in business studies. She went on to further her studies at the University of Belize, where she earned her diploma in business administration in 2001. She has been in the insurance industry for the past 15 years, earning many awards in her career, including Rookie of the Year, Consistency, Persistency, Quality Salesman of the Year Award, and Outstanding Contribution to Community Award, just to name a few. With the will to provide better service to her clients, Shawn has earned her designation from the American College with a diploma as a financial services certified professional in 2014. She is equipped with the financial planning skills she needs to assist her clients daily. She served as president of the Belize Association of Insurance and Financial Advisors from 2015 to 2017 and is currently employed with Sagicor Life Incorporated Belize. She is presently enrolled at Edinburgh Napier University, completing her MBA in August of 2024, and is a proud active board member of Wesley College and Wesley Junior College in Belize City. So welcome, Mr. McGann, and welcome, Ms. Smith. So can we start things off with Mr. McGann?
Sure. Thanks for the introduction and good afternoon, everyone. All right. So this afternoon, I have about a few minutes to talk to you about overcoming financial challenges and balancing our budgets. Important conversation to have in these times, in all times, to think about, I guess, what's our personal strategic plan for our finances. By way of an overview, what we want to cover very quickly this afternoon is one, understanding financial challenges, assessing your financial situation, creating a budget, managing debt, saving and investing, utilizing local resources, improving your financial literacy, and we'll close with some action steps. Bear in mind that this will be a quick overview because we could do an entire session on any one of these topics to do a proper deep dive. Understanding our financial challenges. So we're living in a post-pandemic era where we're getting back to some kind of normal. The image on the slide looks at what's happening with GDP. We see this big V-shaped kind of recovery. It looks like a lot of growth happened, but it's just kind of bringing us back to norm. And then we see the forecast for growth and output to kind of flatline. What does that mean for me? What does that mean for me as an individual, for me as a household, for me as a small business person? Another thing that's been happening is constantly higher than average prices. If we look at the inflation rate as measured by the Consumer Price Index between 2010 to 2019, it averaged 0.7% year-on-year increases annually. But in the period 2020 to 2023, it's gone up an average of 3.3% each year. And I think it's important to note that that's an average and that individual components of that price index, that basket of goods and services that we purchase may have gone up more than that year on year, but just during that 4-year period, that's more than 12% increases in prices. So definitely we're dealing with an environment where we're returning to some level of growth, but prices are higher. We have limited investment and income opportunities. So we live in a bank-dominated financial system. Banks account for over 66% of financial assets, and the deposit rate that they're paying is an average of 1.2%. So it's less than inflation on average, depending on the type of account that you have. Coupled with all of this, we have to deal with the burdens of unexpected expenses and managing our personal debt accumulation. So kind of setting a context as to the operating environment which we find ourselves in. What does this have to do with financial planning and understanding? I think one of the first things we need to do is assess our financial situation. In a similar vein to when we, analogy to use is when we want to lose weight, for example, we have to track what's happening. With anything that we want to see improvement in or manage, we have to track it. So one of the first steps is to track your income and expenses. Keep records of money earned, money spent. And you could do this whichever method works for you. You could use a notebook, you could use a spreadsheet, or there are numerous apps that you could use to actually track your income and expenses. Second step after tracking would be to identify what are your financial goals. And you could group goals in many ways. Main way is short-term versus long-term financial goals. So a short-term goal may be vacation or back-to-school expenses. Long-term goals might be purchasing a home or planning for retirement. The third step in assessing your financial situation is creating a budget. Plan how you will spend and save money. And that's the most important thing that we need to do there. Creating a budget. Not sure how many of us actually have a budget, but it is important that we set a budget because it's a target. A lot of times we'll go over budget or under budget in certain areas, but in the absence of a plan, all roads take you there. Some key steps in creating a budget. Firstly, list all sources of income. So if your job is the main source of income, you put the income from a job. If you have a side hustle, additional work, we put those in all our sources of income. The second step generally is to categorize and track expenses. There are many ways that we could categorize and track expenses. We could track them by activity in terms of transportation, food, entertainment, utilities, rent or mortgage. There are many ways we could classify our expenses, but the first thing is to track them and then get into classifying. When we've looked at our expenses over a period of time, a key way to do this is a bank statement. If you have one, look at the bank statement, what's happening with your transactions over time. Look at your receipts. If you're spending cash, track it for a period of time and then categorize it. It is quite a sobering experience to look actually at where you're spending your money. The next thing you need to do is prioritize what are needs and wants and what might be available for savings and investment. Generally, there's a 50, 30, 20 kind of metric that a lot of financial planners use, where you're spending 50% of your net income on needs, things like food, utilities, shelter, transportation. You're spending 30% on things you want. That could be entertainment. It could be clothing and accessories. Insert the things that you like to do here. And then 20% we want to allocate generally to saving and investment. And again, the next step would be allocate funds for savings and for emergencies. Generally, as a rule of thumb, we want to keep a few months worth of expenses on hand in terms of creating that emergency fund. So in terms of having a short-term goal, it could be to have 3 months of expenses saved away in a form that's readily accessible. It could be in your savings account, it could be in your credit union account, or your regular checking account. I wouldn't advise keeping it in the same account that you're doing the day-to-day spend in, but you want to create funds for savings long-term and savings for emergencies. The next step we could take on is managing our debt. A lot of us don't have conversations about debt. What is debt? What's good debt versus bad debt? So, good debt is investing in long-term assets or things that will improve your ability to generate future cash flows. So taking out a student loan, for example, to improve your knowledge and skill sets is a good debt, because other things being equal, you expect that you will earn more income at the completion of that degree. Using debt to purchase a home is an example of good debt, because home purchasing is a way to increase your personal net worth. We expect under normal circumstances that the prices of real estate tend to rise. So home ownership is definitely a form, or can be a form, of good debt. If we're investing in a business and we separate the debt from ourselves and take on the debt for investment in a business, that could be an example of good debt. Examples of bad debt could include taking out a loan to go on vacation instead of spending savings, taking out a loan to go and party, taking out a loan to purchase clothing, accessories, etc. Those could be examples of bad debt. Consumer debt tends to be a lot higher priced. Unsecured consumer debt, you're looking at between 18 to 25%. If you borrow from money lenders, it could be as much as 30%. So the first step is to try and understand debt and know that debt is not necessarily a bad thing. We just have to use it smartly. Prioritize paying off your high interest debt. So credit cards, for example, personal loans. If you make the minimum payment only, it's going to take you a lot longer to pay off the credit card, and similar stories with personal loans. Another thing we could do is explore consolidation. That means if I have 3 personal loans, if I group them together as one, could I reduce the amount I am spending on debt each month? Communicate with your creditors. I know debt could be an overwhelming thing, and instinct might be to bury your head and hope that the problem goes away, but it won't go away. So one of the best things to do is to have that conversation with your creditors, so that they understand where you are and that you want to pay off the debt, and they might be willing to help to restructure in a way that allows you to manage your debt, because it's easier to restructure than collect on bad debts generally. Saving and investing, next important part of the whole building up your balance sheet. So one of the first things we need to do is to build up savings, right? Set up an emergency fund. If you need to change your tires on your vehicle, if you own a vehicle, can you afford to change tires? Your child gets ill, can you afford to take them to the hospital? If you can't work for a month. Can you afford that? So one of the first things in building savings is to set up an emergency fund. Do I have 1 month worth of expenses, 2 months worth of expenses, 3 months worth of expenses? With the emergency fund, there's a lot of advice and thought process on that. But my advice to anyone would be just start with 1 month worth of expenses and then expand it to 2 and 3, so that you give yourself that breathing room to deal with unexpected changes in your regular income. And the next thing would be save regularly, automate. One of the things I always tell people, like, if the sales tax increase from 12.5% to 15%, you would still manage to purchase the things and live a similar lifestyle to what you do now. You would adjust. So if it is possible, automate your savings so that you save regularly, whether that be in the form of a salary deduction or you making your transfers as soon as you get paid. Treat it like a tax, because it's important to help with your financial goals. After we've done things like setting up an emergency fund and automate our savings, then we look at the rate of return on savings versus investments. When we reach this stage, it's important to carefully consider the merits of each type of investment. At a high level, there's debt, which is borrowing. So individuals and households are not the only ones that borrow. Corporations and governments borrow too, and there's opportunities to get some upside or some interest income from that borrowing. Equity, where you invest in part ownership of different enterprises and you receive dividends and hopefully capital gains. It's a higher risk investment. And then alternative investments like real estate. So I said earlier that real estate is a good investment, good way to build your personal net worth, but it's also an illiquid investment. So if you have an emergency and you need to move out of one asset to another, like a real estate property, you may end up selling at a loss or an unfavorable price if you really have a liquidity crunch and need to come out of that investment. Definitely, I can't underscore how important it is to work on savings and investments. These help with long-term financial planning. What does it look like in 20 years, 30 years, 40 years? How much income, how much finance are we going to need to survive? What are my goals for my kids' education and for retirement and your other personal long-term financial goals? Utilizing local resources. A lot of the literature on this speaks about what's available in the States and other advanced economies where they have 401ks and exchange tracking funds and all these things. Here we have banks, we have credit unions, the government borrows through issuing treasuries, and we have other securities like the utilities, like your BEL, your BTL, your BWS, who's offered some securities. And we have other investments like real estate. Critical thing is to read the fine print, a lot of terms and conditions and risks associated with each type of investment, and seek independent advice when making investment decisions. And the graph just shows kind of the risk reward spectrum in the different types of investments that exist. Another critical thing is to constantly seek to improve your financial literacy. It's important to understand financial terminology, read books and articles, watch videos on personal finance, attend workshops and seminars like this one, and use online courses and resources. The more we learn about financial literacy, the better we're able to put these things into action. In terms of action steps that we can take coming out of this, one, I would say, if you're not already doing it, start tracking your expenses today. Create or update your budget if you have one. Set a small financial goal to achieve in the next month, and seek out local financial resources, financial literacy resources, and support. With that, I thank you and I turn back over to the moderator. Not sure if they'll pause for questions or move on to the other presentation.
I have a question, Mr. McGann. Well, what we've been noticing recently is that inflation has, for the most part, been outpacing what the banks are paying in savings. So, what alternative methods of investment would you recommend?
I think the first thing is to be at the position where you have savings and your emergency fund. And then when you hit your savings target, then you can move on to sort of investment decision and investment considerations. The types of investments that you would look for would be related to what your financial goals are and where you are in your life journey. So, for example, if you're a retiree, you wouldn't be investing in risky things at that point, or you're close to retirement. So I think that's important in terms of what's available. As I mentioned, there's government treasuries, there's some utility bonds. The credit union is always a pretty good option in terms of using it as a form of savings. I think they're paying somewhere around 4%, around that ballpark figure, relative to 1% and 2% at funds, right?
Okay, so thank you for that, Mr. Magan. So what we can now do is we can move on to our second presenter for the day. With us is Miss Shawn Smith. So Miss Smith, the floor is yours.
Good afternoon. Okay, so today what I'm presenting on is protecting our money and our peace. And this is a very important topic. It has a lot of important details as well as things that we could do further discussion on. But for today, what I did was I summarized most of the important points. And then later on, if the topic should continue, we'd be able to do them on a point-by-point basis. That would be much better as it regards to sharing the information. Next slide, please. So we know that financial management is an important process in our daily lives. It involves organizing, monitoring, and controlling our personal and family finances. By managing money, we know that we could achieve short and long-term financial goals and reduce financial stress. We know that a lot of people right now, because of the cost of living is so high, it causes a lot of stress. And whether or not we want to accept it, it's a reality that we need to upfront and see how we could deal with it. So we will be exploring practical strategies to help us achieve these financial goals and better our future. Does money matter? Of course it does. People often think that we can compartmentalize various parts of our lives. We may think that eating does not impact the way we feel, or that financial situations won't have any impact on our health or our relationships. However, it's possible for some people to separate it, but others, the challenges may vary, and it bleeds over into different situations in our lives, and it does affect us on a daily basis. Protecting your money is crucial to maintaining financial security. The important steps that we could take to safeguard these financial assets would be to exercise caution when online. We have to be wary of the messages from people claiming to be businesses, as well as government agencies. We all know that there are a lot of online issues when it comes to protecting our accounts. So we have to be vigilant in doing our part to ensure that we safeguard our finances. We need to avoid clicking on attachments or links that are unknown. Using strong, unique passwords or enabling your two-factor authentication method that also helps us in securing our financial assets as well. Be aware of the red flags. If something sounds too good to be true, it probably is. Scammers often promise something for nothing, so investigate further if you could encounter these pitches. And avoid wire transfers to strangers. Please, if someone asks you to send money to them, always remember that that money might not come to you. It could be a permanent transfer and it's a non-refundable transfer. So be very cautious of it and before you take any action on that part. Regularly monitor your account, check your bank account daily for discrepancies. We know that sometimes some people's account is being hacked, and by the time they actually realize that their money is gone, it's too late. So we need to revise our statements and our accounts daily, or credit card statements at least once a month, and always remember to log out after completing online banking transactions, just to ensure that you're preventing unauthorized access. Protect your assets legally as well. Consider putting your assets in trust, insurance policies, and retirement plans. Ensure valuable assets like your house and your car, and plan your estate to ensure a smooth transition of assets in the future. So if you have a lot of property, whatever you have, you want to ensure that at the end of the day, all of this is protected. Budgeting. Budgeting is one of the main things that gives us peace of mind, as well as ensuring that we're planning our financial future effectively. This is the key to successful financial management as well. This involves managing and allocating your money wisely to meet your financial needs and goals. There are several simple steps in creating a budget. First, we need to identify the income, because we have to know where the money is going to come from to budget in the first place. And then we calculate our expenses. What are the necessary expenses, the short-term and medium, long-term expenses? And then we set them in priority. We prioritize them so that we ensure that our budget we could be able to stick to this budget and ensure that we're meeting our financial goals each month. Evaluating your personal budget. Evaluate your personal budget expenditures to look for ways to reduce cash outlays. Look at ways on how you could reduce the expenses that you have on a monthly basis, and how you could shift around to ensure that the money that you're receiving is not, the expenses is not exceeding what you have. Consider refinancing your loans, consolidating debts for lower rates, and paying off your debts. Investing in yourself through continuing education for professional marketability. This can lead to increased income through new business ventures and supplemental income. Savings. Savings is very important. It's a deferred consumption tactic. In economics, a broader definition is any income that is used for immediate consumption. There are short-term savings, which is the daily life and which is for daily living, and it provides immediate satisfaction. We have long-term savings to ensure future security and stability. We have short-term goals, creating budget and building an emergency fund, and we have long-term savings, which we could always consider low fee and diversified investment accounts or endowments. So what are some strategies that we could incorporate to ensure that we're saving? We have the automated savings process, where you transfer part of your pay into a savings account. You could ask your employer to do this for you by setting up a transfer from your personal account to the transaction account. This way, you're saving without having to think about it. If you have to actually take that money every month aside for yourself and set it into another account, sometimes we tend to have other things that come into play and we forget to do that. So it's best that we have an automated service, automated process that allows us to have that direct contact from account from your income directly into your transaction account. And then you could also look at your expenses to see what you can change or where you can get a better deal. it may surprise you how little things can add up. So once you're looking for better deals, sometimes you go to the store, we want to buy, like, for example, if you look in the grocery refrigerator and you see a pack of chicken that costs say $10.50. Sometimes as adults know, what we look at is if we could see one that is $10.05. So that is the kind of saving strategy that you want to use. They all add up at the end of the day, and you want to make sure that what you're doing is very efficient and it's meeting your financial goals. Savings and investing. Apart from creating a budget, the next step in your financial management is saving and investing your money. This helps you build wealth and achieve long-term financial goals. Emergency savings are very important. Allocate a portion of your income to your savings account that can be easily accessed for unexpected expenses or medical expenses or even sudden repairs. Investing is the key to long-term wealth growth. There are various types of investments that you can consider, whether it be a mutual fund, invest in properties. Make sure whatever investment that you're doing suits the risk profile of your financial goals. Try to reduce your debts. This will help you to build the wealth and also achieve your long-term financial goals. So like I said before, if you meet with your loans officer, you consolidate your loan, you look for lower interest rates. All of these helps you to reduce your debt, and you'll have more disposable income that you could invest and also save. Another part of the peace and protection of your financial future is to create asset protection planning. Many people believe that asset protection planning is just for the wealthy, which is wrong. Estates of anyone in any income group can be sued or suffer from hefty taxation. If someone dies and they have a lot of property, one of the things that does hold some individuals back is because they don't have that excess cash for the transfer of the legal fees and so forth that comes along with that transfer. So we want to ensure at the end of the day that we are securing that part of it through our asset protection plan. We implement strategies which can mitigate the effect of creditor claims and other issues on our wealth. If you were diagnosed with a critical illness right now, the monies that you actually have saved, whether it would have been a long-term or short-term account, most times goes towards your illness. At the end of the day, if you owe the bank won't tell you to stop pay because you're sick. The bank want their money. So you would have to ensure that you have plans in place to protect your assets, because the same house that you had, maybe you had mortgage with the bank. If you're not able to pay, the bank is coming for that home. We want to ensure at the end of the day that we're protecting our assets, whether it's a critical illness or if you die. It's a vital and completely legal component of both financial planning and estate planning. There are a number of key tools you can utilize to accomplish the goals of protecting your assets. A financial advisor can help you structure and organize your assets so that they are more likely to achieve your financial goals. Preparing emergency funds. An emergency fund is always important in terms of your financial management. These are reserve funds that you can access quickly to address emergencies and unexpected needs. By having adequate emergency funds, you can handle emergencies like job loss, medical bills, without having to rely on additional debt. This provides important peace of mind and financial stability to you and your family. So you won't have to worry about fundraisers and so forth, because you have effective emergency plans in place. Peace of mind in financial planning. This peace of mind causes you to have a state of emotional well-being and confidence that arises from having solid financial strategies in place. You feel secure about your financial future, knowing that you have taken steps to protect yourself and your loved ones. Some aspects of financial planning that contribute to peace of mind are creating your emergency fund as a safety net for unexpected expenses, and also debt management, where you have peace of mind from managing debts effectively. Paying off high interest debts and avoiding unnecessary borrowing ensures financial stability. What is insurance? This is something that always gets me excited because it's right in the line of what I do on a daily basis. Insurance is a contract which is a contract represented by a policy in which a policyholder receives financial protection or reimbursement against losses from insurance companies. The companies pools the client's risks together, make payments more affordable for the insured, and some people across insure their cars, their homes, their health, and their life. Why is insurance important? Peace of mind, we know. Insurance protects you, your family, and your assets. An insurer will help you cover the cost of unexpected and routine medical bills or hospitalization, accident, damage to your car, or injury, or others, home damage, or theft or belongings. We know that the hurricane season is coming very fast, and we're expecting to have a very active season according to the weather reports. So we want to ensure that if our homes are damaged, if our properties are damaged, that we are protected. This will bring peace of mind because you don't want to wait until the 9th hour for the company to say we're not going to accept you because the hurricane or whatever disaster is coming, so we're not able to protect your home. Let's do it from now where we're able to put these things in place. An insurance policy can even provide your survivors with lump sum cash payments if you die. In short, insurance can offer peace of mind regarding unforeseen financial risks. Insurance coverages. Adequate insurance coverage such as health, life, and property gives you peace of mind. It protects you and your family from financial hardships caused by unforeseen events. Retirement planning. Knowing you're saving for retirement allows you to envision a comfortable future. Contributing to retirement accounts ensures financial security during your golden years. Investment strategies. A well-thought-out investment plan helps you grow your wealth. Diversifying investments and understanding risk tolerance contributes to peace of mind. And estate planning, creating a will, designating beneficiaries, and planning for the transfer of assets provides peace of mind. You know your wishes will be honored even if you're gone. Improving your financial education. Now, how do we do that? We need to ensure that these topics are starting off from, I would say, at a primary level all the way up. That would definitely help our economy. Each individual will understand educating yourselves is important. Financial learning resources are available to us, and financial literacy for our kids, so that we're starting this from they're very young and they're able to train themselves so that when later on in life, they're not stuck with debts. Basic concepts of financial literacy: budgeting, creating and managing a budget, saving, importance of savings and the type of accounts that you could save, basic investment types, and debt management, understanding debts, strategies for debts management. It's always important that whatever goals that you're attempting, in this case, your financial goals, that you do it the smart way. Ensure that it's specific, it's measurable, it's achievable, it's relevant, and it's also time bound. With good planning and the right steps, you can create a brighter and stable financial future. Peace of mind isn't just about numbers, it's also about feeling confident, and secure in your financial decisions. Seek professional advice and stay informed about financial matters to ensure that you maintain that sense of calm and peace of mind. Thank you.
Okay, so thank you very much, Ms. Smith. What we'll now do is we'll open the floor to any questions we have from the participants.
Sure.
Hi, good afternoon.
Good
I
afternoon.
do have a good afternoon, ma'am. I do have a question for both presenter. I want to start with Ms. Smith. It is
Sure.
talking on insurance, right? I just want to ask if there is something like this that the insurance offers, like whereby you have your deductible being taken towards your insurance, and then you also have like you're paying an amount, right? It's just a question. You're paying an amount. Some goes to your to deduct for your insurance, and then some goes towards like a saving account for the insured, and also it's like a plan whereby because you're saving, let's say there's a major medical, you have the insurance company that has a portion that they will suffice, you know, like satisfy based on your deductible and all of that. And then your saving, is there something that you have whereby your saving now qualifies you, or the insurance act like a loan space where your savings that you have qualifies you to maybe borrow a certain amount, maybe double your saving with the insurance? I don't know if my answer is, my question is clear, but I'm just asking if there's like a plan like that, like there is a savings plan along with your insurance plan that you can actually borrow. Your insurer is paying what they need to pay, but then let's say there's a real major medical, you can borrow from your saving, but maybe like 2 times the amount because there's a saving pool or something. I don't know if the question is clear, but that's my question for you.
All right, that's okay. I kind of understand where you're coming from. You're actually relating to 2 different plans that we have available. One of them, medical-wise, a medical plan is separate from the savings. So a medical covers you for hospitalization if you need it, x-rays, ultrasound, surgeries, as long as it's medically necessary, that would be where a medical plan comes in. In terms of the savings, what you want to look at is, and what we have primarily for what you're asking is called an endowment. And how that works is that you'd be able to be covered for a life insurance. So say, for example, you're covered for 200,000. In the event of that, your beneficiary receives that 200,000. But in addition, if nothing happens to you and you keep this plan up to age 65, for example, what you would receive is that 200,000 as a payback to you. So your only responsibility would be to ensure that your premiums are met monthly. Sitting with an advisor, your advisor would be able to let you know what would be your monthly contribution. And from there, you could either set up what we use as a salary deduction or a standing order through the bank to ensure that your payments are being met on a monthly basis, and that the benefits that you are looking for is matching what your payment is relating to. So your advisor would be able to give you more information. You could always reach out to me afterwards and I'll be able to share more with you in that regard, but it's 2 separate plans that we're referring to.
Thank you very much, ma'am. And then I said I had a second question for, I think it's Mr. McGann. Mr. McGann, I don't know if I mean, many of the time we sit in a forum like this or a webinar and we hear all these nice ways of budgeting and saving and all doing all the things, but a lot of people go back to the home, go back to the workplace, and they start all these things and then they fall, right? So my question to you, sir, is do you yourself, or can you tell us of an organization that maybe actually work with individual and sit with them maybe a 6 months period to get them like hooked on it? You know, like anything you want to do in life is like they say there's a 21 days practice and you get hooked. Well, I think for finance it needs to be longer, but I'm just asking if yourself or an organization would sit with a person, check their budget, check their expenses, check see where they can actually formulate a plan, and then, you know, monitor and help them monitor for a period of time to get them going.
That's a good question in terms of ourselves or no, we don't offer sort of retail coaching. I think some of the credit unions may have some sort of retail coaching. But that's perhaps there's an incredible need in the market for some type of coaching product to help you to stay on track, because like with everything, if you have like an accountability partner, it definitely helps to have someone saying, hey, you said you were going to keep on track. So no, and I am unaware currently if anyone does something exactly like that. Maybe my colleague could comment if she knows anyone.
If I'm able to insert myself in that, that is exactly what I do on a daily basis. Um, it we sit with you, we go through the budget, and based on that, we're able to incorporate a discipline program where you're able to. I like the 21 days approach because you're on the line, you're on the right path. To ensure that at the end of the day, you are meeting your financial goals. And this is something that definitely we would like to have continue with this kind of program in terms of communicating and allowing people to understand that there are means of going around and getting these things done. So definitely I'm able to assist you with that and give you the guidance that you need going forward.
Great, that's very perfect. I don't know if you mind putting in the chat your contact and we go from there. Thank you so
Not a
much,
problem.
everyone.
Okay. I also have a question for both Ms. Smith and Mr. McGann. We know that, well, when unfortunate things happen, and in the absence of a will, grant of probates can be expensive and very protracted. Within the Belizean context, in Belize, can we obtain or can we establish trust funds?
I think yes, you are able to establish a trust. You would need to sort of meet with an attorney or a corporate service provider that actually creates the trust for you, and then kind of define what is the specific purpose, who's a trustee, and what assets you're transferring to the trust and the beneficiaries. But I think it's a conversation that needs to be had in terms of estate planning. Like was mentioned in the other presentation, it's not only something for wealthy persons. We all should think about estate planning and what will happen in that time, and having the conversation. A trust might be the solution that works for you, or a simple will might be the solution that works for you in your particular case.
Agreed.
And Ms. Smith, in addition to the regular health and life insurance, as well as property insurance, what other type of insurance would you recommend to the common person here in Belize that might not know that could be beneficial to them?
Well, it varies actually, because what we normally do, different individuals have different financial goals that they want to accomplish. Sitting with someone that has kids versus someone that doesn't have kids, the views on life might be a little different. Recently we have been meeting with several individuals, both young and old. Well, we won't call them old, but closer to retirement. And what we have found is that the priorities aren't the same. So if I'm able to sit with you and you have kids, then what we could look at is your family protection. What would happen in the event something happens to you? Would your family be okay? Financially, where would the money come from? If you and your wife pay 50-50 in terms of expenses in the home, then what happens to your 50% if you are no longer there? So there are different aspects in sitting with the individuals when it comes to financial planning, and I prefer to do that on a one-on-one basis, mainly because priorities might be different.
In addition to that question, does Sagicor still offer the triple protection plan? I know that was one of the well, when I did my internship with an insurance provider, I was aware of the triple protector plan, in which I think it was more geared towards women, and I found it to be quite useful, quite a good plan.
Right. Well, we just did the cancer walk yesterday, which is good because I have seen that people are still putting themselves out there and getting that additional education as it relates to critical illnesses. What we have found is that several individuals are being diagnosed, both older and younger individuals are being diagnosed with different types of cancer, kidney failure, heart attack, stroke, and that sort of thing. So the plans tend to change in terms of names from time to time, but the provisions of the coverage are similar. So it's all geared towards affordability and what you could afford for the month and what plan would best suit you and your family at the end of the day.
Okay, thank you for that.
You're welcome.
So what we have is for those of you participating in today's webinar, we have three prizes. We have a couple of gift certificates and we're giving away a book. So Ms. Smith, would you like to ask a question to the participants? We have a $75 gift certificate from Brothers Habet. So, Ms. Smith, if you can ask the participants a question and whomever responds correctly, they will win themselves the gift certificate.
Okay, let me see. What would be the best financial planning tools that you would implement in your daily life based on the presentation that we had?
Okay, so guys, that's the question for the $75 gift certificate. What you can do is you can either raise your hand and respond by putting on your mic, or you can respond via chat. Okay, so we have that question there. What we can do is we can move on to the second question. So while they decide on what is the correct response for the first question, we can have Mr. McGann ask a question. And the prize for answering this question is a printed version of the book While Passing Through by Bev E. So Mr. McGann, would you like to assist us with asking a question on your presentation?
Sure. When creating a budget, there was a rule of thumb with some percentages that were recommended for needs, wants, and savings and investments. Does anyone remember the percentages for needs, wants, and savings and
Okay, so that is the second question of the day. If any one of our participants has the answer for any of those two questions. The second question relates to the budgeting split. If anyone can give us the percentages for how we would go about dividing our monthly income into those categories. Okay, so we have a response from Miss Kimberly, who says that you would check and balance your expenses and formulate a savings habit and use a portion of the income to invest to roll over income. So I guess that is a response for the first question.
Yes.
Is that correct, Ms. Smith?
Yes, so she'd be able to do her savings. That's very good. That shows that she was listening into the presentation. So we have a winner there.
So congratulations, Miss Kimberly. You've just won yourself a $75 gift certificate from Brothers Habet. So we have the second question still pending, and it is how you would go about dividing your budget according to Mr. McGann's presentation, or the rule of thumb that you would use to divide your budget. Okay, so we are just about that 3 o'clock hour. Thank you very much, Mr. McGann and Ms. Smith, on such insightful presentations. I think that it is a step forward towards learning more about financial literacy. Thank you very much for coming on and sharing your insights with us. So remember, motivation without action is like a car without fuel. So let's turn these insights into impact. So Ms. Smith, Mr. McGann, thank you very much for joining us today. Stay tuned for more episodes of Motivation in Action. Until next time, keep your financial compass steady and let's make those dreams into a reality. Thank you very much and enjoy the rest of your day.
Thank you so much. Thanks for having me.
Thank you.
Have a good
Thank
day.
you and good evening.